Isn't it pretty ironic that yesterday, the video that came out at 4 p.m., I start making those videos around 2 p.m. to get them out at 4 p.m. The title of that video, the irony, someone knows something, ... leaked news was the thumbnail main headliner. Lo and behold, it happened. This was mainly due in part of unusually bullish option activity in Tesla stock from big money yesterday. Holy smokes, Tesla did it. They lowered the price of FSD. Now, is this good? Is this bad for Tesla stock? There's some key details that you need to know, and I will share with you the initial reactions we are seeing from different fund managers. With that said, we will also be giving you an update of all of the data surrounding Tesla stock and what could come next. Hit the like button, subscribe to the channel. First things first, let me know what you think about this information down below in the comment section, and let's get started. So first things first, as I mentioned, Tesla has officially lowered the monthly FSD subscription price to $99 a month from $199 a month, effectively cutting the price in half. Now, here's the deal. In my opinion, from I think a market perspective, $99 a month for almost a perfect driving software is a fantastic value. It's cheaper to have FSD throughout a month than it is to go to Starbucks every single day. And the car can damn near drive itself. So I think from a value perspective, $99 a month is a great price. I also think this is a great time to do this, as people are able to use FSD about halfway through the free month's trial now, a little bit less than that, but pretty close. They're going to see $99 a month, less than $100 a month, and I think that does boost the subscription revenue that Tesla is going to get. Instead of the take rate being 10%, the take rate could be 20%. Now, I just want to make sure we're all on the same page here, because initially, this may not be seen as a huge revenue positive for Tesla, because simple math would say if you cut the price in half, 50%, well, you have to double the amount of people that take on FSD to just be neutral. So if the take rate was 10% at $199 a month, you need the take rate to be 20% at least to be at the same kind of revenue that you were at on this subscription service. Now, I think what's more important than that is the continuation, right? Once you get above, let's say, the fleet right now, let's just call it has, a million FSD cars out there. Well, you're going to be able to grow the fleet a lot faster at $99 a month. So initially, yes, you do need to get the take rate up quite a bit on the overall Tesla fleet now, but as cars get sold, that take rate's likely to be a lot higher, probably around 25% or so, even call it 20%. You're going to get a lot more vehicles subscribing to FSD. So in the end, this will be a huge net positive for Tesla. I also feel, from my perspective, just getting more Teslas out on the road to continue to get this training data coming in, that is also valuable beyond a dollar amount, right? Because you need this data to develop the Robotaxi network. And as you guys know, there is 6 million Teslas out there on the road right now. Let's say the take rate based on the entire fleet goes to about 17% following these latest actions. That's going to be 1,020,000 Teslas on FSD. Let's assume that maybe half of these individuals, let's call it like 65%. I think it's probably going to be higher than half. So 65% are doing the monthly subscription. That's 663,000 people or cars that could be subscribed to FSD at $99 a month. That's 65 million times that by 12. That's already a yearly essentially profit at almost $800 million, because when you turn the software on from Tesla's standpoint, you've already put the hardware into the car. So the biggest cost is recognized up front when you're actually building the cars. So once you turn on, FSD for a vehicle, it's basically pure profit. So that could be about $800 million in just pure profit. On a EPS basis, that could be about 24 cents added to EPS. So materially, this does make a difference to Tesla's projected profitability. We don't know what take rates are. Yeah, we can speculate here. So I don't know how much of an initial value the markets are going to ascribe to Tesla lowering prices and presumably boosting the take rate. But even on this metric, considering Tesla has 1 million vehicles now, likely in FSD, it could be higher than that. Right. It was about 500,000 before the free trial. So maybe the fleet size doubled. Maybe it, did more than that. Who knows? But as far as what I can see right now, if this is truly accurate numbers, which I believe it's pretty close to this, regardless, you can boost EPS by quite a bit. Gary Black seems to have positive things to say about this. He writes on X, just a couple of hours ago, if Tesla's FSD 12.3.4 is as good as those who have deployed it say it is, it will help sell more Teslas, now at $99 a month. And that's also something I think worth mentioning, is this software itself could start to sell more Teslas. This article from investors.com, I think, also provides a very important point. They write Tesla FSD subscription price slashed to $99 a month. It says also the lower rate could spur more people to subscribe to FSD versus paying the $12,000 for a lifetime service. At $99 a month, it would take just over 10 years to pay $12,000 in FSD subscription fees. However, the company has begun offering FSD free trials to a new Tesla vehicle. Also, if FSD shows dramatic improvement and attracts heavy demand, Tesla would likely hike prices substantially. And that's, I think, further down the line, kind of like what Netflix and Spotify and all of your subscription services have done thus far. They get a lot of people on the platform at low prices. I remember Netflix was like $7 a month a couple of years ago, and now it's what, like 12, 13? It's almost doubled just for the base service. And then it's like $20+ or whatever, I think, for different accounts. So that's probably the strategy here. And this may overall shift the Tesla business model. The way that analysts value Tesla could become different following this latest price reduction of FSD. If indeed this is Tesla's strategy, get as many people on the software as possible and then raise prices. Which would make sense as the value of FSD goes up, the price should also go up. And again, back to what I said originally, the value at $99 a month makes a lot of sense, but you still have to be attentive to the vehicle. If you no longer need to be attentive to the vehicle, give it 12 months or however long it takes to become level 4 autonomy, level 5 autonomy. Level 4 would be not having to pay attention to the vehicle. Level 5 is no gas pedal, no steering wheel, no person has to be in the car. But once you get to level 4, then I think there's a lot more value than $100 a year. Then I think it makes sense for $150 or going back to, $200 a year, potentially. So yes, this is a positive for Tesla. And you can see in after hours, Tesla stock was up 0.33%, which is notable considering the NASDAQ was down 0.25% Friday in after hours. But I will point out, algorithms can be exceptionally strange sometimes. And typically, someone lowering the price of something, or a company lowering the price of something, like Tesla when they lower the prices of their vehicles, markets don't necessarily take that as positive. So I'm kind of mixed on how the markets may take this. But I think you should take this as insanely positive. Now, I think this will be seen as a greater positive once we get Tesla earnings on April 23rd, and Tesla says, yeah, we didn't cut prices because people are not signing up for FSD. We cut prices because we want more people to sign up. But we've already seen a lot of people sign up, and the take rate has already jumped dramatically. Maybe we get some figures there, some percentages of take rates, and what Tesla's longer term plan is. And they're probably going to say they plan to raise prices on FSD in the future. But I ultimately think this is really a move that Tesla's making for the data purposes, right? If you could put financial numbers on the data and how important the data is to develop full self-driving in the application of FSD and actually applying that in the real world, there's so many dollars and market potential behind that. How do you value the data, right? To be able to get you to that point. I think this makes a lot of sense for Tesla. But again, I'm really not expecting any kind of crazy upside here for Tesla stock until we get to earnings on April 23rd. I think there's now more things the markets want answers to. FSD, what's the pricing strategy? What's the take rate? How is that going to evolve over time? How long do we think until the Robotaxi network can be here? What about the Model 2? Is that canceled? Is Tesla planning to launch the Robotaxi network, along the same timeline as launching the Model 2 originally? So that would be the second half of 2025. If that's the case, great news. We don't need consumers getting the Model 2 if we're going to launch a Robotaxi network in the second half of 2025. I think a lot of people are full of shit for that. Okay. A lot of analysts, a lot of individuals say delaying the Model 2 for consumers would be a net negative. Not if Robotaxi comes sooner. No way. If Robotaxi comes sooner, instead of delivering Model 2s to consumers, Tesla uses those Model 2s to launch their own initial Robotaxi network. No. That's a huge positive. And I won't let anyone say otherwise. Overall, what determines if a stock goes up or down, it is earnings expectations. If earnings are expected to rise and do better from here, Tesla stock will do better. And I think you're in a very good position there because earnings estimates for 2024 have fallen like 60% in the last 12 months. So as we get into 2024, as we're heading into Q2, or already in Q2 now, if Tesla can forecast greater profitability, and EPS is going to come in higher, then Tesla stock is going to go much higher. And I think that's what is going to happen. Even 2025, if Tesla can paint a better picture for 2025 profitability, that means Tesla stock would likely start to do well now. Overall, let me know what you think about this situation. If this is a positive for Tesla in your opinion, if this is positive or negative for Tesla stock here in the short term. I think the real judge of this shouldn't be coming Monday morning. I think the real judge of if the markets are going to take this positive is when we get more information, when we get Tesla's earnings on April 23rd. But let me know what you think about this down below in the comment section, and on with your other Tesla stock breaking news today. And as of today, Tesla is no longer allowing free FSD transfers. Sawyer Merritt says, I got a lot of DMs today after Tesla dropped the monthly FSD supervised price to $99. The price drop definitely seems to be having the desired effect. Tons of new signups. People are excited. Tesla's Scope here on X says the largest wave to date of full self-driving supervised 12.3.4 has just gone out to eligible Tesla vehicles as of March 15th, 2024. Sawyer Merritt says, I expect this price drop in FSD could cause the take rate to 3 to 4x, maybe even more. And you can now redeem 3 months of FSD for 6,000 credits in Tesla's referral program versus 10,000 credits before. The US government has reimbursed auto dealers, including Tesla, for more than $580 million in advance point-of-sale consumer EV tax credit payments since January 1st, the Treasury just said. The IRS has received 100,000 time-of-sale reports this year. And here's a picture of the Argentinian president meeting with Elon Musk at Giga Texas yesterday. And here are more images. Looking at some of these, like this one, maybe you could see them initially discussing some kind of partnership that could make sense. Tesla's global inventory numbers not doing much today. The Model Y very elevated at about 9,600 in total inventory. Model X down here at about 2,600. Model S at 2,200, and the Model S at 1,200. Model 3 sitting down here at about 2,200. And again, it looks like Tesla's found that sweet spot for advertising on Google, currently running about 4,000 different ads. Over on StockTwits today, Tesla has a sentiment score of 45, which is neutral. 1 day ago, you had a sentiment score of bearish at 44. So even though you had this news come out for Tesla, it's not like people, at least retail, are super bullish on this. I think, well, at least not on StockTwits, we can't definitively say that, but this is a pretty good metric to look at for retail investor sentiment. I actually think hedge funds and institutions may be more bullish on this than retail, at least initially, because this long-term can be a massive driver of profits for Tesla as more people presumably sign up for FSD. You have message volume today of low at 39. Yesterday, you were normal at 48, and the participation ratio is at 55, which is categorized as high. Full self-driving Google Trends data is sitting at about 100 still if you go from 2004 until present day. If we look at the last 12 months, full self-driving has exploded. Some preliminary data suggests it's falling back to about 52 or so, and that's exactly what I want to see. Does FSD stay in the 40s, 50s as I expect, or does it fall back to where it was trending at in between, 10 and 20? I think that'll tell us how the continued take rate is going for Tesla and FSD. As I previously reported as well, on Friday you've seen a lot of very positive hedge fund institutional option activity in Tesla. You had 515 orders totaling $1.26 billion with a positive order value of 68%. In the video that came out yesterday, this was like 94% at 3 p.m. And normally you do see numbers finalize and shake out by the end of the day. So you did see some negative bearish orders come in, but still Friday was a big positive day for Tesla option activity. And it's actually funny because the video that came out at 4 p.m. yesterday is titled, "Someone Knows Something, ... Leaked news was the headliner on the thumbnail. So in the options market, it seemed like somebody already knew the price was going to be lowered on Tesla's FSD. Short interest of free float on Tesla is at multi-year highs at 3.9%. You have $18.84 billion currently in short positions, with almost 108 million shares sold short. So again, simple math here would say for every $10 Tesla stock goes higher, shorts are going to lose about $1.08 billion. For every $10 Tesla falls, shorts are going to make about $1.08 billion. I think the shorts are biting off more than they could chew. They're in a very bad situation heading into Tesla's earnings. And if we do see a massive rally upon Tesla earnings, I think shorts covering could be a big driving force of that. Not to mention retail investors that sold out of Tesla, that were expecting Tesla to fall, down to $100 per share, $80 per share. I think you're pretty close to a bottom for Tesla and a subsequent rally. After all, 160 may have been the bottom, as you have seen support there 3 trading days in a row. And what happened every time you hit 160? Well, you bounced pretty aggressive. You do have drama in the Middle East, ratcheting up a little bit more today. Iran's Revolutionary Guard seizes a container ship near the Strait of Hormuz amid tensions with Israel. Apparently, this container ship was an Israeli container ship. And that's the big problem for oil, is if the Strait of Hormuz starts to kind of get choked off and Iran starts to slow down some of the traffic through there, that becomes very problematic for the global oil markets because 30 to 40% of the world's oil supply, goes through there every single day. That's not great. But if you look at some of the, biggest headliners here, it says Biden returns to the White House at short notice amid Israel-Iran tension. This was 2 hours ago. That's not a great look. And 2 hours ago, it says the U.S. issues another travel warning for Israel with Iran attack believed to be imminent. And it's believed over 100 missiles could be fired at the capital of Tel Aviv. And Biden says he expects Iran to attack Israel sooner than later. So yes, this is a situation that can affect the markets. Maybe one could say it could be a black swan event coming on Monday if something happens over this weekend because of the implications to oil if there are or is a larger conflict in that region. Something I will keep you posted on, but I'm not going to sugarcoat it for you. This does have a possible implication to oil, which does have a deeper impact to markets compared to like the Europe situation where, the world's kind of been revolting against Russian oil for a long time, or at least the U.S. has been, and that was only one country. But Iran basically controlling the Strait of Hormuz, that's pretty problematic for the entire oil supply out of the Middle East. And well, if gas prices in the U.S. theoretically were to rise to $5, $6, $7 on a national average again, that would do a lot of economic harm to the U.S. Thus would be a big deal for you to know in regards to our markets. Because indeed, that could be the tipping force that pushes us into a recession and or causes the Fed to actually start cutting rates in spite of presumed higher inflation due to oil. So nonetheless, there are a lot of potential implications here. I will keep you posted. As far as Tesla, that's really everything you need to know. On the charts, your 20-day moving average, this yellow line here is a very important level. You want to break out to the upside there. If that happens, fantastic. And it looks like you held a lot of support most of last week around this 20-day moving average. On Friday, due to just the overall weakness in the markets, Tesla stock did give back about 2%. With the move in after hours up 0.33%, you're really down about 1.7%. Not a big deal for Tesla. It looks like Tesla actually did better than a lot of other stocks on Friday. And overall, you're sitting right here at this 20-day moving average. If you can get back above that coming next week, that's going to be fantastic. If not, if we do have a broader sell-off, probably due to this Middle East situation, then Tesla could slowly trend back to the 160 level before earnings. That's kind of my expectation. Anywhere from as high as 188 to 160, that's where I expect Tesla will be from now until April 23rd. After earnings, I'm like 75% convinced Tesla stock could go up huge, like 10 to 20% following earnings, just based on how low expectations are today. Let me know what you think about all of this information down below in the comment section. I love your opinions and they do a lot of value to the community. You guys, most importantly, enjoy the rest of your day. Enjoy your Saturday, for crying out loud. My name's Michael Tyler. If you guys would like to come join the trading community, check out that link down below in the description of this video. Enjoy your weekends. I will see you in the next one.